Welcome and thanks for joining us at EMII.com. I'm Caitlin Sisney with your hedge fund headlines. Today is Wednesday, March 19th, 2008. The spun-out brokerage unit of Man Group finds itself in a deepening hole, the likes of which its former parent probably could have never imagined. MF Global has seen its share price drop 65% this week. It dropped 81% since the beginning of the year, all on speculation that the firm is being hit by clients clamoring for their cash. The firm, which went public last year, suffered stock prices tumbling from $11.30 to $6.05 yesterday, recovering from an intraday low of $3.64. In an effort to soothe investors, MF Global said it had sufficient funding. In the event that its funding sources change, it has an additional $1.4 billion in credit. Staying with hedge fund news, according to a report by Fitch Ratings, European investors are taking a new look at funds of hedge funds, and they like what they see. According to a senior director at Fitch, the report found that more investors on the continent are viewing funds of hedge funds as valuable investments to achieve absolute returns, adding that the FOHFs that will attract the most business are those with good investment allocation expertise coupled with good sourcing capabilities. The sector still faces challenges such as issues related to managing size, pressure to lower fees, and investor desire for better subscription and redemption terms. And in other hedge fund news, private equity firms are increasingly interested in investment opportunities in Eastern Europe, with Poland grabbing the most attention. Head of European PE practice at the law firm DLA Piper Philip Dubsky says, quote, Warsaw remains the center of gravity in the region, largely because of its powerful stock exchange and mature advisory networks. Growing interest in the region was noted last year when firms such as Bridgepoint and 3i Group made investments, and the Carlyle Group and CVC Capital Partners reportedly are forming investment teams to cover Eastern Europe. And in hedge fund news in Asia, head of the Children's Investment Fund, Christopher Hohn, asked the European Trade Commissioner to impose sanctions on Japanese institutions if they reject its application to double its stake in Japan's J-Power. According to Sunday Times of London, Hohn says it should be a reciprocal arrangement. If Japanese companies are allowed to buy into English companies, then English companies should be allowed to do the same. The Children's Investment Fund wants to increase its stake to 20% to force the utility to raise dividend payments. J-Power has resisted, saying it has always welcomed foreign investment, but J-Power is as regulated entity can't just raise dividends at will. And that rounds out today's hedge fund headlines. Thanks for joining us on EMII.com. For more details on these stories and much more, click on our hedge fund channel online and read the latest developments.